All right, good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for September 27th, 2023. We'll start with Alcoa, 30-minute chart for the hybrid swing. Uh, as always, the yellow box is today's price range. The blue box is the 5-day range box. So 1, 2, 3, 4, 5. The blue box gives you the 10-day. It's a little bit off the screen there. Yeah, yeah, and you can see the high and the low of the 10-day range, of the 5-day range, of the 1-day range, and then the black line gives you the 30-day box. So we'd actually have to scroll out a little bit to see that. And that's kind of central to the way we look at the shorter term trading, the swing and the day. Um, and the point to note here is just how big the 5-day range is compared to the 10-day and the 30-day range. A real increase in volatility, like prior to the last 5 days. This range right here really was the kind of the sideways chop, and here is where you get that dramatic move down. So you get a large 5-day range compared to the 30-day range. So that's how a directional move with a breakout actually looks like. So I'm just going to kind of zoom in on the last 5 days so we can see the context. So Alcoa, we had yesterday, we had a continuation short, which we covered at the end of the day. Then there was a gap up, and that's the reason routinely I'm cashing those, because I don't like losing money when I don't have a chance to get out of positions. Sometimes I'll take that risk if I think there's a reason to it, like there's a 1-day move that catches the market by surprise, and there may be a continuation the next day in the same direction. But this is at the end of a 5-day move, so I felt like I wanted to just take it while I could get it. And then today there was a gap up that cleared the PSAR flip, and we took the standard risk, and this thing rolled over. And as this is rolling over here, it takes the dragon skin exit, and that gives us about +1R and no overnight risk. Check or hold. That is essentially the central idea of hybrid swing trading on the 30-minute. Okay, here's AI, no trade. I'm sorry, no, here's AI. AI has a trade. Sorry, clicked the wrong symbol. So after the long slide in AI today, and it closed here yesterday, here's the gap up above the PSAR, so a gap up and go. So I buy that breakout. Standard risk. It's the same risk every time. It makes a big run up and then starts to decay. And then as it comes to the edge of the dragon, I just take about a 0.3. Now there was a recovery intraday, but that didn't attract me because I felt like if there was going to be a move, that this should really go. And I was looking for it to get back to 26, but it only got about halfway and then started to pale. And then when that rolls over, I take the dragon skin exit for about 0.3. Amazon, so again, a really strong 15% sell-off The most recent one, sorry, this, I drew that poorly. This is supposed to include that. Sorry about that. So that gives us the close on the short position. There was a second position available yesterday. Today there was some selling pressure, but it never really violated, and it comes into this little point and starts to reverse. So I take it at the edge of the dragon as the RL10 is reversing. You can see that here, that you would expect this to get into the harsh winter, but it didn't. So I was happy to take this exit, which on that much risk is a 1, 2, 3, 4, 5, almost 6R, so call it 5R in 2 days. And then the PSAR flip happened, so I take one of those R and roll that into the market's money for the reversal. And that one holds. It makes a nice run up and then holds right here. So we're holding about 0.5 R in hand, but I'm looking for a recovery tomorrow. I'd like to see it get above that price. And then if it gets there, then this closes the gap to here pretty quickly. So 131 could be in play tomorrow on a Thursday as a recovery after a 15% sell-off. Amazon on sale, 15% off. Why wouldn't you? If you're a fund manager. That would be like the second day of momentum. If tomorrow works, then it will work because a bunch of people with money that are watching this say, hey, maybe the 15% sale is over, and this was enough of a move, and that's the support level, so maybe there's a continuation play tomorrow. The first sign that that is true would be a break above today's high. So that'll be the tell. And I'm willing to hold that as a second day of momentum. And I'm really just aiming to get back to here. That'll make this a really strong trade. But that's what a transition looks like. And then I'm looking for to get back to that previous support level. So I'm playing for that move, which is this move. Okay. Caterpillar, no trade. What we did was covered the short from yesterday. My thought was that if this was going to continue, it was going to look like this because it's had 4 days of recovery. And then yesterday started that move and it didn't collapse, started to reverse. So I cashed +1. Then I note this. This feels like a Kata 2 is shaping up. And if it does, that means tomorrow this will continue to stay above the PSAR and should go. And if it gets above 274, then that would be a sign of recovery. So we'll see what Caterpillar is kind of my proxy for the industrials and Main Street businesses, you know, the industrial strength of a nation. So it has that kind of position in my mind. So this is Cliff, the steel company. So here was a sell-off. It failed to fail further. It gapped up. This is what that gap up and go looks like when it works. And we ended up getting 3 positions in on this one. On this day, we sold those 2. That was a 1-day intraday trade. The next day, it failed to follow through. So we exited this entry here for a nice trade. Yesterday, on the PSAR flip, this thing collapsed and closed right here. So I maintained that short, and then this is the cost of maintaining the overnight risk. It gapped up to here, and I turned a 2R win into about a 0.5, call it a -1 loss, because of the adverse gap. So I covered that one and just stayed out of it. I missed the the reversal, there was a revenge trade in here. But I did take the Kata 2 because now I'm back in the zero state. The winter turned to summer right around in here. And with the standard risk, that worked. And I'm willing to hold that one. That's about a 2R win. And I'm willing to hold that because it has cleared the previous RL10 peak. So that makes this whole thing look like a head fake. And that makes this look like a continuation of that strong move. So because it has cleared previous resistance, I'm willing to hold that. I would not be offended if you took that exit right here and then decided just to play this as a critical state in either direction tomorrow. But my spider sense was that this has a chance for a gap up and go. And so I have 2R in hand. But then I had 2R in hand on this one. And maybe I should have been able to figure out, oh, the previous trend was the strong one. But that's hindsight. So I'm holding 2R again, and I'm taking my chances on that one tomorrow. CVS. Now here's one where, I pick and choose where I'm going to hold that overnight risk. So this choppy action, and then we got the PSAR flip, and I held that one with about 1R in hand. And then today, that thing gapped down to here and sold off harshly. When it started to fail again right here, I added a second position and said, what am I waiting for? Let me add a third position, and then let me, on a 1, 2, 3 exit, I'm going to get out of all of that here to raise cash and reduce my overnight risk. I was willing to hold the overnight risk in Cliff, but not in CVS. And on 1 unit of risk, 3, 4, 5, this one returns plus 5R. This one returns plus 2. That one returns plus 1. So that's plus 8 and no overnight risk. Now, what's that mean for tomorrow? It means that this becomes very interesting as a zero state. If this rolls over tomorrow, then this would be a pocket entry if I get short in here. If I wait to get short below the break of the RL10, then that is a collapsing dragon. But if I get long here, then that becomes an SSC because it has broken the PSAR, and I'm looking for it to get to the high of the day today, and then if that works, to get to resistance here, and then the peak of the RL10. So that's going to be a complex scenario for tomorrow, right? But big sell-off with a nice little recovery. I take my gains, and now I set this up as a zero state, and I'm ready, and I just rehearsed what happens on that complex move tomorrow. So that's my scenario rehearsal. That is a standard play in hybrid trading. Check or hold. That is like the most routine pattern of all, right? Here's one, same thing. This is Dish. Horrible sell-off, just like the rest of the market. So we had a scratch, we had a micro gain, and then we had a massive gain yesterday. And then when this did not fail further, I covered that one when it hit the dragon here, and that is 1, 2, 3R. And then this could have been an intraday short. If I had taken that short, I should be exiting somewhere here. But I'm just observing this one, and this feels like a zero state right here. So tomorrow, now that I have no overnight risk and no directional bias, I'll put this box on there. If it breaks above here, I'll be long. If it breaks below here, I'll be short. So this is my unit of risk, and this is my first target here, and that gives me 1, 2, 3 to 1 to the upside. And if this collapses, there's easily 3 to 1 to the downside because it looks like a continuation of that trade. So that's 3R on that cash, and that helps offset some of that that loss I had on the other trade. All right, here's Devon Energy. This is at the tail end of a big selling period. I mean, that's been a move from the 30-day high of 54.50. Well, I'll call it 54.40. So those of you that know American history. And then the sell-off came all the way down to here, the 30-day low, which has held at 46. So that's minus 8 on 54. That's 1/7, which is about 14%. So that's a 14% sell-off. And if it was going to fail further, it's had 5 days to do it, and it didn't. Instead, it's given us a grind, a second move up. So that's the context for this trade, that feels like a swing low. And we had a gain on the downside, a gain on the downside, 3 days of sideways chop. I tried the Kata 2 long and took that little gain yesterday. There was nothing in here, but today it gapped up, a gap above the RL10, so I buy it, hold my nose, there's standard risk, and that thing just does this, and now I'm holding 1, 2, 3, 4, and this feels like the turnaround play. It managed to get back to that resistance level. So I've got 4R in hand. If this continues tomorrow, let's say above 49.25, I'll add a second position long, and now it's free and clear. But if this doesn't work, I want to be out of this around 48.50, so I'm holding 1 unit of risk, and then that would give me about a 2R win. Would you be wrong to take that for about a 3R win? No. That's a perfectly reasonable move. EA, sideways, no trade. Emerging markets, the short continues. I'm playing this one on the basis of, in case there's market weakness. If there's market weakness, tomorrow that's going to get smashed. But if it doesn't, then I'll end up scratching that one. Ethereum, no trade, that's collapsing. Mexico, I covered the 2 position short for a really good trade in this series. 1, 2, 3, 4, 5, 6, 7R on this one. And the second position we got in has about +3. So that's what a 10R trade looks like. And that feels like a potential bottom. So it failed to fail further. It did not fail. It is just flirting with the SSC. And so I want to have no overnight risk. And I'm ready to play that long or short. Look how nicely Mexico trades on 30-minute swings. I mean, what more do you want? That's such a beautiful symbol. It's an intraday frog champion as well. Same trade in its running buddy in Brazil. 2 positions short, covered. It's a little further into the SSC, like it actually breached here. But that's probably 5 or 6R right there. And this illustrates the idea of the second leg down. So look at that as leg 1. Pause. That was a scratch trade. And now we get the second leg down and it covers. Now if this breaks down, I'm playing for the third leg and it should be that large, which means it could get to 27. You know, the size of the downward leg is symmetrical. So if there's a third leg down, that's going to be significant. But if it recovers, then it should get to 31 tomorrow. So that'll be in play. Intel, holding that one overnight on the supported spring crossing. IP, Kata 2, long holding. Real estate, Covered the short when it didn't fail further, but then it failed, so I got back in and I took the dragon exit. This does not feel like a runaway sell off like this did. So maybe this is the beginning of bottoming pressure. So a couple days down the road and maybe early next week, we'll start seeing a recovery of real estate back to 81. KRE took the 1-day, 1 hour intraday. Mattel, this was painful in the morning. So I thought I was holding 1.5R in hand. I was. And that thing gapped all the way up to here. So the plus 1.5 became -2. And it had cleared the RL10s. So that's a stop and reverse. And then I got +3 on the revenge trade. And I was content to get out of this with net 1. So I missed this move and I missed that move. I wanted nothing more to do with that one. That one just hurt my feelings. McDonald's took the 3R gain with a dragon exit. Merck got a second position in on this one for about 3R, and then no overnight risk. Microsoft, I'm initiating the SSC here. This just feels like it's on sale. It was 330 at the peak. It's down at 310. So that's -20 on a 330R. That's about what, 7%? That's a 7% sale on Microsoft. And it had 3 days to fail and it didn't. So here's the PSAR flip after this long and glorious move down. So I'm willing to play that one as an SSC. Marijuana, no trade. Nvidia started the Kata 2 long. I'm seeing some recovery strength hinted at in the tech. Clean energy covered the short for an R. Rivian initiated a Kata 2, closed well. SPY, this was the first, sign of a possible recovery since back here. This one failed. That one failed. So maybe the third time is the charm. Maybe this, if it gets above 428, then you look to see it get to 432, which is a +1%. If that works, it gets to here. The heavy lifting is being able to bridge this gap all the way back to 443. So there's a couple easy legs up for the next 2 days, but this is the significant gap. That is acting like a big inhibitor. It has to cross that no man's land. This is just a tactical trade back to here. It'll take serious buying pressure to get through there. Treasuries are doing what they can to help the equities by just getting smashed all the way down to 88 now. Tesla took the intraday 1-day short. It's like I would never go short Elon Musk for the long term. Like if he had an idea here, that's the sensible play, is to bet the long side of this. But throughout this, there are periodic tactical moments when you can short him for tactical reasons of very short duration. And that's what this looks like. These are like 1-day shorts. Like I am not making a career out of shorting Elon Musk. But tactically, there are some moments where what I'm doing is I'm shorting the fanboys. Like this might have been fanboys running that price up, and then there's a tactical imbalance, and you can get, I'm not shorting Elon, I'm shorting the fanboys that are indiscriminately buying Tesla whenever they can. So it is a tactical trade to be short. U.S. Steel, this is one where the gap got me also. Here's the short. I was happy as a clam, and then the gap took all of that away. So that was at one point, that was +3R overnight, and all of that evaporated, and I got out of there with capital, and I didn't have the willpower to trade that. But this is in play. That is a violent, volatile stock, U.S. steel, and there will be an intraday 3-minute trade on that tomorrow. All right, that's the 30-minute hybrid swing. That is advanced trading techniques, and appreciate your patience. All right, let's look at the sniper trade of the day. So this is Devon Energy, and this was the recovery in the energy sector. That had been a long, harsh sell-off to here. Here was the gap up. So there's the 3-minute OR3. That's the gap and go trade, and it failed immediately for minus 0.5. It held. It did not close the gap. And that's a CATA 2 re-entry, same standard risk. And that thing grinds its way up here, gives me plus 3. So now I am net 2.5. I try the CATA 2, minus 0.2. Tried the CATA 2, minus 0.3. So now we are net 2, because that's minus 0.5. That kills that one. So now we're positive 2. On this one, I see the declining highs. I play the collapsing dragon short, so this one is a stop and reverse. There's my risk box. That's plus 0.5. There's the CATA 2. Second entry when this clears. This is a new high of the day, and we are almost 2R in hand. So second position, and that exits, so we get 1, 2, 3 on this one, and this one is plus 1. So maybe 7R potential out of this thing during the day, and no overnight risk. That's Devon Energy. All right, let's take a look at the traders. Let me hit the reports first. That's what I think I want to do. All right, daily report. You can see here that we've got a compound critical state at the end. There's 2 legs down. There's 1, 2, which puts this whole move at risk. Made a new 30-day low today, so that's today's range. I'm ready to trade that tactically in either direction. The first target is about 416 on the downside. Target on the upside is the 5-day high at about 435. And you can see on the 30-day look back, we did close a fraction higher than yesterday. It was one more effort to break to the downside, but the buyers came in pretty strong, I felt. And this feels like potential bottoming point right here. So we're going to treat that as a compound critical state. We have no directional bias, and I will be ready to play long or short out of today's range. But I like the fact that it held, and that the PSAR flipped, and that we had a 2-day move, just like we had a 2-day move here. So there's room to the upside. Still sideways normal, had a little bit of recovery today. Volatility is still favoring sharp, sudden moves. The U.S. indexes are showing buy on dip opportunities. We are still within sideways markets, and volatility is showing risk off. A couple symbols broke out. Chevron in energy, ExxonMobil, so it's telling you the strength is in energy. Clusters of weakness. Coca-Cola is still on my short list to buy as a value play. Just about everything is framing out well on the auto framer. Still plenty of 5DDs to entice you. This is a trader's market right now. The ETFs are showing the same kind of work. Notice that the oil was the lone source of strength today. Tons of things on the auto framer. Lots of indexes breaking down everywhere. Everything is on an auto framer, as you can see. Just a couple squeezes in 3M and Walmart. Walmart, therefore, becomes very interesting to me. It's 2.4 to 1 on the risk reward. 3M is at 9.5 to 1 for crying out loud. And a tight squeeze in a doji. That's worth a look. This is my tactical swing setup based on, I've sorted it based on reward to risk ratio. Everything north of 2 to 1 is justifiable for swing trading. You got lots of indexes like real estate is 5 to 1. Clean energy, Mexico treasuries, Brazil, all looking good. Even the S&P is at 4.5 to 1. That's how sharp this little test was. Tesla, 3.2 to 1. The metals are doing pretty good, and so is energy. Tale of two cities, haves and have-nots. All the things getting smashed. Weak. A few isolated pockets of strength like Cliff, U.S. Steel, and the energy complex. Oil exploration, energy, and oil. That'll tell you something there. Here's the odd signal, though, if you look at that one a little more closely. Look at the defensive plays. Gold, utilities, consumer staples just getting slaughtered. That is not people buying defensive plays. That's a real anomaly right there. That tells me maybe the tactical run is done. Our trading value ratio, Tesla, marijuana, Intel, Nvidia, regional banks, clean energy, Devon Energy, all looking pretty good. Winter dominating with the exception of energy and healthcare. The slope of the RL30 is still threatening to the downside. You can see the percent stretch. We were up at 2 sigma, 1, 2. The market was in that raging bull, and it came all the way back to the zero line, and it's almost at -1. So the downside is still being threatened. There's your parametric or polynomial RL30. So this is still weakness. This might be, from a pure tactical trader intraday, that's weak evidence to say the run to the downside is over, but that's what it looks like at turning points. But if this thing breaks down tomorrow, I'm so short like it'll make your head spin. That will still cause a lot of pain and suffering. Notice how wildly volatile it's been in the post-COVID era, and this is a range compression in volatility that could be ready to break out large. Increasing volatility as measured by the standard deviation of price and by ATR. So this is the return of volatility after a long period of quietude. So you can see the shape. That was significant. when that rolled over and left the river. Now, this could be like this, which was a nice upward move. But this could also be that caught 2 to the downside that gets all the way back to 410, 415. So compound critical state, ready to go in either direction. You must respect that. And notice how the volatility is expanding to the downside. The Bollinger Bands plus or minus 1 makes that clear. This was the first warning shot, and then it made a lower high, smash. All right, I think that was it for that. Let's take a look at the traders. Red doing some nice work at the turn. Gains. Micro loss. Minor win. 1.8. So 1.4 for the day. Nice work. Missed the run up from in the early morning. Tried to get a second. Tried to take advantage of that. Gets out of there quick. We should be ready to stop and reverse here. Like he did here. So when he's not aligned with the market, he loses half an hour. When he's aligned with the market, he nets 2.7. So that's how to get your mind right. And that's not even getting the second leg down. That's good work. Oops. Here is Brian. Reverses twice correctly here to buy back half of the loss on the first one. And then there's enough harsh winter left. Hey, when this thing has 1, 2, 3 legs up and is rolling over in the owl, we got to be able to take that. There's a collapsing dragon here and here, and you can still get most of that move, which brings it all the way back to this level. This is just starting into the winter. So the reversal at the start of the winter means you're taking advantage of that season. So the winter signals potential for big collapse, which is what you got here. Hamad, let's see, nets 1 out of here, gets the long side and the short side with a quick scratch. Nice work. Amazon, we got to get that PSAR flip on that failure to follow through. We should be able to hit that one. And then this Kata 2 should be hit at the, when it rolls through the dragon and not at the PSAR. I think you can get that earlier, especially given the size of that move. And that would make you much happier. Lots of chop, minimized his losses. Tesla, I like that you still were able to keep firing and hitting that short side. I think there was another trade in there, but I think they had family issues. Couldn't get that, but man, re-enter and put a trailing stop and leave it alone. That could have been massively good. And there was a lot more. So Tesla is in play. Aussie dollar. Stops are really tight here. I think you got to respect the PSAR. Remember, the forex is not going to run away from you like the stocks will. So you got to adjust your mind on that one. Better work here on the pound. George gets paid. I like it. Money management, and kept the gain that time instead of giving it all back. Nice work on Intel to minimize those losses, but where were we in here? That OR3 and a big break and go. Got to be ready for that. And good job trimming the loss here. But there's a stop and reverse. When this thing, I want you to just take, the reason to have the other days on here like this is today. But the reason to have yesterday and the previous days is to understand where the support levels are. And what you've got is a COTA 2. This is supposed to fail all the way back to here, like to erase all of this. When this does not fail and reverses and it crosses the dragon again, that's an entry right there or right here, and you get all of that in a hurry. So pay attention to what these other support levels are telling you about the shape of price and the big turning point that you're seeing there. This thing fails fast when it fails, and when it's going up, it's grinding because that's what it does on the long side. So we need to make that a stop and reverse, not later than entering there. All right, that's everything for today. We'll get this published and posted and be ready for them tomorrow. Take good care.